Hey, this is Danielle. Today I'm going to be talking about a buy setup in Spotify. So I like this chart for a couple different reasons. When you look at this chart, first of all, what you're going to see on my earnings hot zone is that we are entering the pre-earnings timeframe. Spotify is going to be reporting earnings in mid-July, and as of the last two trading days, we have entered into the 21 bar timeframe before that earnings report. So that's typically when we start to see that implied volatility increase. You can see right here that the earnings volatility has already started increasing. And so when you're looking at purchasing options, you definitely want to buy it like right around when it starts increasing because it's just going to continue increasing going into that earnings report. And ideally, you can capture a rise in implied volatility along with a rise in price. So there's a couple different reasons why I think there could be a rise in price along with a rise in volatility. And one of those reasons is because of the squeeze. So right here, we have this daily squeeze, pretty nice squeeze setting up. And that squeeze is in the context of a trend. So typically what we'll see when we have a squeeze and we have a bullish trend, that is just signifying that there's consolidation right there that's likely going to break out. Now, that consolidation is most likely going to break out in the direction of the trend. Most of the time it does. Yes, sometimes it fires to the downside, but generally you're going to bet on that in the direction of the trend. Now, this trend is an uptrend, and the Fibonacci targets to the upside are at 340 and then upwards at 350. So we have some pretty nice targets there. You also have the fact that there's a previous high here. Typically, I'm going to target that previous high first, and then I'll target the full targets just to be a little bit on the safe side. I usually call this one the easy target because a it's a lot easier for a stock to trade up into a previous resistance zone than it is to break resistance and go to the new high. So that's what I'm looking for here. There's a couple other reasons why I like it. If you look at the earnings hot zone, you're going to see that there's multiple different gaps post earnings. So these are the previous earnings reports. You've seen that Spotify has gapped up 3 quarters in a row. Last quarter, it gapped up 10%. Quarter before that, it gapped up 8%. Quarter before that, it gapped up 6%. So typically, what I look for is, I don't know what it's going to do on the actual report yet. We're way too far away from that date. But when people see that it's been gapping up after earnings, basically they say, oh man, I want to buy some more of this before the report. And that causes that increase in price. So we know there's going to be an increase in implied volatility because of the earnings report. We also know that there's a couple different reasons why there could be an increase in price here. And then I also just want to go back and show you this weekly chart because these weekly highs can really be a magnet. And right now, we're trading at 313, so we're pretty far away from 387, but it's not out of the realm of possibility because if I have a price target at 340, 350, at that point, you're only $30, $40 away from that previous all-time high. You add another earnings report with another big move. I mean, it's not out of the realm of the possibility that the stock is heading that direction. So for all these reasons, I like Spotify here. The earnings date doesn't look like it's confirmed yet, so that does make it just a little challenging because sometimes these things will change on you and you'll have options in the wrong series, which is not really ideal. But there's nothing you can really do about that when the earnings date isn't confirmed. So there's a couple different things you could do. You could number one, just buy the stock. You could also come in, you could buy some Delta 70 calls in the earnings series. Now, this stock doesn't have great liquidity, so that's going to be pretty hard to do and actually make money on it because you can see that these calls, for example, have a spread of $26.55 by 33.70, so super wide spread. So for that reason, I would stick with the series that has more liquidity, which is going to be that monthly series. This would not be the exact same series as earnings, but the liquidity in the options market is a lot better. But I mean, again, you could also just buy the stock. So you have Delta 70 calls. So you're going to be going for about $20, $21 around the 300 strike. You could also set up a butterfly. You could set up a butterfly, for example, targeting 340. You could also set one up targeting 350. I do think, like I said, the 330 is going to be the easier price target, but you'll notice that right now you're trading at 313, and in that time frame, you have a 26-point expected move. So, you could do 340 or 350. It just depends how aggressive you are. This would be the least aggressive way with the likelihood of it hitting pretty good. But if it hits too soon, the butterfly is not really going to mature enough. This one I think is a pretty good middle point right here. It's where I have those Fibonacci extension targets. But I do like this one because it has all that high open interest. So pick your poison. Basically, you just want to set up the butterfly in a way that matches the kind of risk that you want to have on in the market. Sometimes I'll do them a little bit out of the money like this. So you could do like a 320, 340, 360. Butterfly like that is only going to cost you $3.33 for a $20 wide fly. So you're paying a debit of $3.33. The max you could sell it for, if it gets close to 340 around that expiration date, would be $20. You could also widen it out a little bit more. You could do $5 more on each side. No, it looks like you can't because that strike's not trading. So let's see, widen it out a little bit more. Okay, so you could do 310, 340, 370. At that point, you have an in the money option, which, it's going to be a lot more expensive. But the thing is it's going to have some more intrinsic value. You're also going to have a wider butterfly. So you have a $30 wide butterfly. So that is something that you could, theoretically make more money on, because the max you could close it for would be $30. On these kind of butterflies, generally I'm looking for, around like a double on the debit. Obviously, if you can get more, that's amazing. But I tried to have a lower target because, just try to get in and get out. Not trying to get the exact bullseye, though it is possible. If you want to learn more about us at Simpler Trading, come and join us in the Simpler Central trading room. I'm going to put a link in the video below. But basically, you can come and join us for an amazing trial. You can also get signed up to my 5-Star Trader newsletter, which will give you my free Options 101 class. And in the trading room, you will have access to our whole team of traders, trade alerts, weekly watch list, premium newsletter, and more. Hope you're having a great day, and I'll see you in the next one.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.